Hello and welcome to another video on my YouTube channel. My name is Joris and today I am here with the second update of my Yuh portfolio, and I'm going to say how the situation was at the end of the 25th of October, so the last trading day on Friday the 25th. And I deposited 200 Swiss francs on the morning of the 25th of October, and at the end of Friday I had 924.31 Swiss francs. Yeah, so I took a screenshot on Saturday morning at 7:39, and then the total value was 924.31 Swiss francs. As you can see, the last trade that I did was buying 2 shares of Logitech, and with the 200 Swiss francs that I deposited, I bought those 2 shares, and that was just lower than 140 Swiss francs. So I'm really happy about that. I'm going to talk about that later. But in total now I have a cash position of 90.53 Swiss francs. I thought it was going to be 19.54 Swiss francs, so 1 cent more. And it was indicated like that on my Excel sheet as well, but I looked at my balance on the Yuh app and I was surprised that it was 1 cent less, but it's the way it is, so I'm not going to talk about it or complain about it more, except for one time in this video, but okay. The investments now make up 833.78 Swiss francs, and those are divided into stocks, 828.98 Swiss francs, and of course a crypto amount with the Swiss coins that we receive. So I received 5 Swiss coins with the trade in Logitech, so that's why now I have 275 Swiss coins, and that is worth 4.80, as 1 Swiss coin is worth 0.0174468 Swiss francs. And as you know, I don't invest in crypto, it's just something that I receive. You are always happy with something that you receive for free. It is worth something, but yeah, I have to sell it also if I want to have it in actual money. So I just keep it as it is in Swiss coin, and let's see what it brings. So I don't care that much, but it's important that you know that of the investment amount that you always see on the screenshot that I take from my investment app from Yuh, that this amount always includes the 480 from the Swiss coins as well. So what I bought is 2 Logitech, you already saw it, minus 139.94 Swiss francs, as one share costed 69.92 Swiss francs. I never thought that I was going to pick Logitech up below 70 Swiss francs so quickly. I knew it was going to drop eventually one day when there is a huge crash or something like that. It can happen. But yeah, last Saturday I made a video about the 20 stocks that are in the watch list for the Yuh portfolio, and on Tuesday morning they announced their results and it started dropping like a brick, and I don't understand it, but more on that in a few minutes or seconds. So yeah, I picked it up below a PE of 18. So on the 18th of October, I made this slide for the other video. So the price was 76.12 Swiss francs, the dividend 1.16, dividend yield 1.54, the earnings per share 3.80, the payout ratio is thus 30.5%, the PE ratio is 20.03, and I said then, yeah, it needs to be below 18, but that's going to take a while. And the positive points, the negative points, you can look at the video with the 20 stocks that I made last week on my YouTube channel. Go check it out. It's a really great video, although I think so myself, so you can make up your mind then as well. But yeah, now they announced on Tuesday, the 22nd of October, they announced their Q2 results, because yeah, Logitech is a bit special because they don't follow the other quarters like a lot of other firms. Their their fiscal year actually starts in March, or April, I should say, in April. So the end of March is their end of their actually financial year. So now they announced their Q2 results, so their second quarter results, and their revenue was 1.12 billion. The estimate was 1.11 billion, so they beat expectations, and it is up 6% year on year. So this is totally great. It's as previewed and everything. So the guidance for the full year of 2025, they actually increased it. So the revenue is now 4.39 to 4.47 billion, and the previous range that he gave was 4.34 to 4.43 billion. So they increased it a bit, and perhaps that's why the stock started dropping, because perhaps people expected more, but it's a bit silly. If you expect more, then the price of Logitech should have been much higher, of course, on the stock market. But that's not what happened. The sales growth, now they give a guidance of between 2 and 4%, whereas they previously said it was going to be between 1 and 3%. The CEO said in his communication that there is a continuous, robust, profitable growth driven by improving demand. Growth was broad-based across regions, categories, and both our consumer and business customers. So only the webcam was actually down a bit, but that was then compensated with the 3D goggles that they sold. So yeah, if you don't want an extra camera for your PC and you immediately invest into a 3D goggle, I think it's more interesting for Logitech, because that costs a lot more than a simple webcam, of course. But yeah, a lot of people said, yeah, but the webcams were down, but they don't look at the 3D goggles. So I think it's a bit silly. And also the regions, all the regions were up, even China. So that's great. And they launched terrific set of innovations in the second quarter, and they are also ready for the holidays. And that was really great to hear that, because in the holidays they are selling a lot, and now they said that they are ready. In the previous year, sometimes they missed a bit of earnings because they didn't have enough stock. Now they have enough stock, so that's really important as an investor to know that. So I was really happy to hear that from the CEO of Logitech. And if you look at it now, as of the 25th of October, it was at 9 o'clock that I bought the stocks. So at that time, the price was 69.92 Swiss francs. The dividend 1.16 still. The dividend yield 1.66. The earnings per share, it was up a little bit, 3.89 Swiss francs. So, and the dividend yield, yeah, it goes up because of the price going down, of course. So, but the earnings per share, because they increased their estimates, the earnings per share, it was up as well. It was 3.80, now it's 3.89 Swiss francs. The payout ratio is now below 30%. So that's really great. It's now 29.80%. Although, yeah, it was at the price that I bought, because now it's a bit higher. And it's 70.34 right now. And the PE ratio was 17.97. So I like to buy my shares below a PE ratio of 18. For Nestlé, I will have to wait longer. It was on the way down, they announced their results. They weren't great, but yeah, people believe in the new CEO of Nestlé. Unfortunately for me, I thought it was going to go down for another quarter before it started picking up. But yeah, for Logitech, I was lucky. For Nestlé, I was unlucky. That's the way it is. But yeah, for this, the price dropped. So a lot of people are unhappy, but I definitely am happy. Picking up Logitech for a PE lower than 18, I am thrilled. So now the portfolio looks like this. So we have investments in Holcim, Swatch, Logitech, and BKW or BKW as we say, and all four of them are positive. The only one that is down is Volkswagen, and that was to be expected. But yeah, I'm not going to reinvest too soon in stocks that I already have in our portfolio, in my portfolio. So I'm going to try to pick up other shares from the moment that I have around 10 and Volkswagen is still around the same price as now. I will definitely pick up some more, and yeah, then Volkswagen is going to be the biggest position in my portfolio. Now it still is because it's 194 and Swatch is the next one. But yeah, if you look at it now, the portfolio, it is up 2.95%. So yeah, I can go over the slide, but you can pause the video and just go over it. The only important thing to know is Volkswagen, everything is in euro in this line, and then everything is converted with this conversion measure. 1 euro is 0.9358 Swiss francs. To calculate this, this is just the amounts that are the amounts that were on the Yuh Portfolio app when I bought the stocks. So it's not with the correct conversion ratio because yeah, they just increase the amount a bit to make extra profit from converting the Swiss francs into euro. So that's how they make profit, of course. The costs are still low because I still have the trading credit up until the 3rd of December. So I hope that next month with the 200 Swiss francs that I'm going to deposit, that I can pick up 2 more shares, and then in total I will have bought 7 shares, and all with the reduction of the cost of 1 Swiss franc. So from the 50 francs of trading credit that I received from you, I will have used then 7 Swiss francs. I'm not going to trade more or more frequently than I'm used to. I'm a buyer, I'm not a seller, so I'm not a trader for sure. And yeah, it's trading credit that I received for free because I used the code, and using 7 Swiss francs, I'm happy with that. So my cash position, 90.53. If you look at this, 809.46. That's what I used, and I deposited 900. So why it isn't 90.54, I don't know. But yeah, I solved it in my Excel sheet by just adding minus 0.01 into my formula. I hope one day it's back to what it should be, and if it is, I will let you know. But I'm really frustrated about it. But I'm really happy with the results of my company. So as I went over Logitech already, um, I'm also happy with the next one that I'm going to talk about. And next month, when I add 200 Swiss francs more, I'm going to have a Yuh portfolio with four figures. So then we are up to 1,100 Swiss franc deposited. So it's going fast, only with 200 Swiss francs per month. So now Holcim. This is the graph from the slide from last week. So it was then trading at 84.78 Swiss francs. How much was it now? It is now 83.04, so it traded down in this week. After the results, it went up a bit, but yeah, for the week it is down. So 84.78 it was on the 18th of October. So a dividend yield of 3.31%, earnings per share of 5.33, the payout ratio is 52.5, and a PE ratio of 15.91. So positive point, strong market position in Europe and in the USA, and it's going to split. It invests in R&D to be more sustainable. There is uncertainty about the split, so I was nervously awaiting what they were going to say on Friday morning, but nothing came. It's a highly competitive business, of course, the building business, but yeah, they announced their Q3 results on Friday morning, and the revenue, it is up. It is actually down year on year, but it's slightly up if you don't take into account the currency effect. But it's 19.9 billion Swiss francs right now, and the profitability, it is up 6.6% to 3.9 billion, and they have now a record margin of 19.5%, which is the best of the whole building industry. So that's really, really great to read that. The split off in the USA, so they didn't give more details. They just talked about it in between the lines. So they bought some companies, 3 or 4 companies they bought in the USA to strengthen their position there. They waited, those buys waited on the numbers of the third quarter a bit, but still, yeah, the EBIT margin. And if you wonder what the EBIT margin means, it's the earnings before interest and taxes. A lot of companies also use EBITDA, and then the A stands for amortizations. And yeah, if you believe Warren Buffett and Charles Munger, Charles Munger said that EBITDA, if you replace EBITDA by the word bullshit, that yeah, that you actually know what a company means. But for building companies, that lies a little bit different. I have to disagree a bit with Charles Munger and Warren Buffett. Not too much, because they are definitely right for a lot of other companies. But for building companies, yeah, they have quite a lot of expenses. So yeah, the EBIT, it still counts for quite a lot in the business of builders. And then they talked a bit about the other things of the USA split. So the USA company will have a revenue of more than $11 billion, and then the rest of Holcim will have a revenue of 17 billion Swiss francs and an EBIT of 2.7 billion. So if you look at it like this, 2.7 billion, the EBIT of the first 3 quarters of Holcim right now is 3.9. So 1.2 or 1.3 billion every quarter, more or less. So if you take that, and it's 5.2 billion then, more or less, for a whole year. 2.7 billion for the company of Holcim for the rest of the world means that you have 2.5 billion for the USA company. So there, in fact, it is much more profitable compared to the rest of Holcim that we will keep here in Europe and Latin America and stuff. So in that regard, I definitely think that USA investors are going to see that Holcim, the American part of Holcim, is worth buying into. So the guidance for the full year of 2024 plus the guidance for 2025 in Q4 they will end strong, and they have a margin estimate for EBIT still on 18.5, although in the first 9 months of the year it was 19.5%. But the CEO said, yeah, I'm keeping it at 18.5%, so the investors aren't disappointed when it's a little bit lower than 19.5%. And he's definitely right, because yeah, when it's going to be 19.3% and they were expecting 19.5% for the whole year, Holcim is going to go down again, and investors just forget that the target was 18.5% for the year. So they are doing absolutely great right now, and still Holcim is actually not up that much after the earnings call. In the USA, they have more than 150 projects right now, and in 2025 the CEO said it is going to go up to 200 and even up to 300 projects. So that's really great. And he said that in 2025, with the rate cuts of the Fed and the ECB, the building incentive will pick up again. And that's also something that is great, of course, for a building company. And then the Swatch Group. It's like I always talk about Swatch in the Yuh Portfolio updates, but it's from the Cash Insider. In fact, I read it on cash.ch. So someone bought for over 3 million Swiss francs in shares from Swatch. And a few weeks back, there was also a buy of 40 million Swiss francs of shares in Swatch. And they believe, that's the talk that's going on in the stock market, that it's Nyla Hayek and Nick Hayek who bought the extra shares, and they are sister and brother. And as you know, Nick Hayek is the CEO of Swatch. I think he's great. A lot of other people think he's not great, but yeah, if you invest your money, you should follow your own opinion and not the opinion of others. So it's not financial advice. It's just what I read and what I think is important. But I always read that you have to remember that there are a lot of reasons for people to sell stocks, especially people that yeah, are in the Swatch group. They have a lot of reasons to sell the stocks that they have from their own company. They can need money at that time and they sell a few stocks, and you can read into that what you want, but in effect it's not that important. Of course, when they sell out completely out of their stock, then you know that there is something dubious going on. But when people buy stocks, there is only one reason, and that is that they believe that it is worth more. And now these people that are buying Swatch are the CEO himself and his sister. So I'm a happy Swatch shareholder, and with that being said, I thank you for watching to this one. Please consider subscribing to my YouTube channel. Hitting that like button helps out the channel also. So thank you for watching to this one, and see you on the next one on my YouTube channel. Bye!